Good day, and welcome to Donovan Ransom's Weekly Wraps. I am Viv Cavender, and as usual, what we'll do is we'll go over some of the stories of the week that affect you and your investments going forward, and end up with a little bit of an AI tech segment at the end. Our three stories this week are going to be South African inflation, an update on the Middle East slash Israel-Palestine, and then we look at a deeper dive into the South African retail sector. There's a couple of news announcements this week about Pick n Pay and Amazon, etc. So I thought it's worthwhile just to talk to you about what's happening in retail and what the retail sector looks like. And then finally, we do a bit of a speculative, fun kind of like discussion at the end on AI and especially OpenAI and some rumors around that company at the moment. Okay, let's start off with inflation. We saw South African inflation rise. It's still in the target range of 3 to basically 6%. It came in at 5.4%, sorry, after just being below 5% in the last period. But what is important about this particular thing is the trend. And there's something we saw in the US as well, and something we're seeing here in South Africa. And what's important about it is that we've seen inflation come from very, very high levels, 8+%, down to, almost at the target level. In the US, the target level is 2, they got to 3. In South Africa, the target level is 4.5. We got just above 4.5 in the last period. And the problem is that now we're seeing inflation rise again. And why is it rising? It's because we're seeing food inflation, South Africa, especially around avian influenza, affecting the price of chicken and eggs. I'd have to tell anyone that lives in South Africa what the price of eggs looks like right now, and how when you go to the shops, every shop has a little thing that says 1 per customer in terms of buying like a dozen or 18 or whatever it may be amount of eggs. That is basically one thing. The other thing is, of course, the oil price has risen, and we'll discuss in a bit around the Middle East situation. But this is something we saw in South Africa, we're seeing it in the US, we're seeing it in other parts of the world as well. And what the problem that we're seeing here is that I think that the possibility is that some of the benefits we've gotten from base effects have gone away. What is a base effect? Imagine, say, the price of something is 100. Okay, that goes from 100, say, to 200. That's a 50% increase. From 100 to 200, 100% increase. You go from 100 to 200, it's 100% increase. If it goes from 200 up another 100, it's only a 50% increase because the 100 now is based on the 200, not based on the 100 before. The fact that the price increased by so much, means that the extra increase we have coming off of that is going to be a smaller percentage. Okay, and that's what I think might have happened here. We saw, for instance, a lot of prices increased dramatically, like 8-9% increases in terms of inflation. And what that means is that the new price is quite high. And so that even there's a bit of a price increase from that point onwards, it's going off a very high base. So it's very difficult to do, another 100% increase thereafter, for instance. Very few things are exponential in the world. And that means that, inflation seems to be like moderating quite nicely. And part of it is the fact that the price increases are not as much as before, but also the fact that they're going off a very high base, and that also does help out in terms of moderating the actual percentage number we get at the end. And the problem with this, as I've mentioned many times before, is that we are sitting at a point in which interest rates are at unsustainable levels. I mean, we've got the 10-year bond in the US breached 4.9%. The US has, like I talked about just last week or so, $33 trillion worth of debt. A 5%, interest rate. If they had to service all that debt at 5% effectively, which is 4.9%, just a little bit extra, that would bring them, well in excess of $1.5 trillion in terms of yearly interest payments. Not paying back the capital, not paying back the debt, just the interest payments is over $1.5 trillion. We talk about like 1.65 trillion or so. That is unsustainable in the US, anywhere in the world. Even the US with a $24 trillion GDP can't be afford to be paying, over $1.5 trillion towards just interest payments. It's a huge, huge burden on the economy. And what's going to probably have to happen over time is that they're going to have to do something about their debt, which is going to be difficult to do, or to do with the interest rates, which is going to be much easier for them to do, and likely interest is going to have to come down. But interest is coming down when inflation is not at the target level, above the target level, and rising. That's going to be quite, a disappointment for the markets. Okay, so that is inflation, and the trend, like I said, that we've seen in the last, few meetings or last few releases, kind of, is being replicated. Next, what's happening with regards to Israel/Palestine? Well, this week has been a case where you really can't believe what's happening out there in terms of any kind of news release. There was a discussion about some pictures being released, whether or not they were real or not. There were basically it was a bombing of a hospital, which both parties say the other party did. Hamas says the Israelis did, the Israelis said Hamas did. There was discussion of maybe 500 people dying in that one explosion, and now there's dispute about that as well. As you can see, the amount of misinformation is quite high. That being said, it does seem to be ramping up. I mean, we've had discussions now, pretty clear. I think about 2,000 US soldiers are going to go into the zone. Israel, as I speak right now, has not gone into Gaza at the moment. But when they do, it's going to be quite bloody. It's not just going to be Hamas that dies. It's going to be some Israeli soldiers, depending on what kind of retaliation that happens around that, some kind of airstrikes or whatever to protect their soldiers. They call in. Expect an uptick in terms of death tolls and so on. We are seeing the US getting some blowback from some of their partners in the Middle East. Biden wanted to have a discussion with some people, and apparently in the Middle East, some leaders of some of the Gulf states, and basically was rebuffed on that. We are starting to see, for instance, in the US, protests. The US now has a larger Muslim population than it had at any previous time in its history, and obviously, with things like the Black Lives Matter, etc., protests, which tend to take the part of the Palestinians over the Israelis. Now there's a block of people supporting the Palestinians in the US that wasn't there before, and by no means a majority. I mean, it seems to be about 65, like over 2/3 basically of the US population supports Israel over Palestine, but that's still a significant number. There wasn't 30% of people before that were supporting Palestine. It was like far smaller, but now there is that number, and we've seen, for instance, protests even at the US Capitol. Significant numbers of people protesting, and certain states in the US have a larger population of people from the region or of Muslim belief, and those places basically are seeing politicians having to adjust to that reality. And so we're seeing certain states governors coming out and giving much more neutral in terms of statements about the crisis. I mean, places like, for instance, Florida, Ron DeSantis is much more pro-Israeli, but like Minnesota and so on, it's much more neutral. Okay, and so that's the one thing. The next thing is you have seen oil prices tick up. They're, as I speak to you, just above $90 a barrel for Brent crude. This means there's been a 6% or so increase from the time of the start of the crisis. All markets now, I do think, are starting to realize that there's a possibility of an expansion of this particular thing. Because, like I said, we are seeing more tensions rise, and we haven't even seen the most difficult part, which is going to be the Israeli incursion into Gaza. And I don't think that's going to be, without the threat of an expansion into other parts of the region. I mean, Israel already bombed, I think, the airport and a couple of airports like the last week or so. There's been some, attacks, air raids into Lebanon, for instance, as well. So there has been that small kind of, expansion, but I think the big thing is whether or not Iran gets involved. And if Iran does get involved, then things become much more uncertain, not just for the region but for the world as a whole. Okay, and now we do a little deep dive into retail. So the last week or so, a couple of news stories broke when we had Pick and Pay's results, massively disappointing to the market. A double-digit fall when the results were released. And then we also had news that Amazon is looking to come to South Africa and basically open up that partnership thing that they have in the US, where they come in and you can basically use Amazon's distribution network for your particular items, and you can sell whatever it is you want to sell on Amazon, and they will deliver it for you, etc. And obviously take a large cut for that. Now, why is this important? Retail, I think, is a huge sector in the economy. And it's been revolutionized in a way that we haven't seen for like over a century. The way retail is going to be done in, say, the next 10, 15 years' time will be unrecognizable to somebody like born in the year 2000. No, so from the year 2000, not born in the year, from the year 2000. So we're talking about 20 years ago what retail looks like, 10 years ago what retail looks like. It's not going to be the same in the next 10 to 15 years. There'll be a massive difference. The thing that's going to happen is online. The things that are going to happen are deliveries. We're already seeing ShopRite come out with a subscription service for $60.60. I think it's 99 rands a month, and what you get is unlimited free deliveries above 350 rands per delivery. Okay. In addition to that, you also, I think, get a discount of about 10% for the first certain amount of things. So you effectively buy more than a certain amount, the discount alone would be enough to pay off your subscription plus a bit. And something like that there is very important. For what reason? Because it totally changes how the ecosystem of retail works. Right now, the way you have it is, if you're in a certain region in South Africa and you want to basically be looking at going shopping and buying something, you might just look at the nearest shop to you, and it could be a Checkers, it could be a Pick and Pay, it could be a Spar, Woolies, whatever it may be, and you go there. Sometimes you might think a Woolies might be more expensive than a Checkers. You might just extra go to get Checkers. Sometimes you might think a Spar might not be quite as good as the nearest Pick and Pay, and you go to the Pick and Pays on the Spar. But basically, most people shop at most of these, kind of grocery shops, and without too much of a differential there, except certain like cases. That's going to change. Why? If you're paying a 99 Rand per month subscription, why would you ever basically order anything from Pick and Pay when you basically get the delivery for free from Checkers? And remember, the majority of the things at these shops are the same. Wheat Pix at Pick and Pay is Wheat Pix at Checkers. The Mari biscuit at like a Spar is the same Mari biscuit you'll buy at, for instance, another shop like Woolies or something. Okay, it's the same stuff. Maybe Woolies has a bit more, of their own particular, special brand stuff, but generally in South Africa, there's these well-known brands that are similar across everybody, and all it comes down to is who's slightly cheaper on the day, etc. However, if you have a subscription service and it's a 350 minimum, well, basically you'd be buying everything from Checkers. You would not be buying anything from Pick and Pay. You would not be buying anything from Spar or whatever if you're doing a delivery. That totally changes what the ecosystem looks like. It used to be like maybe there's 5, 10 different supermarkets in your particular area. Now, if you've got this particular system going, we can easily have one supermarket dominating an area, and an area which is basically the size of the delivery, network, where those little scooters can go. That could be like 5, 10 kilometers around the particular shop, where almost all deliveries go via that particular shop's delivery system. Totally changes what the ecosystem looks like I said. In this kind of environment, expect many of the less innovative companies out there to really fall behind. And I think like what we've seen so far is that probably Pick and Pay is like one of those vulnerable companies. You've seen, for instance, this week's, earnings releases, quite a drop off in terms of profitability. In fact, the first loss they've ever had, interim loss they've ever had. The fact that they brought back an old leader to run the company, somebody that, I think the statement he gave was something like, just keep it simple, just, make it pleasant to go to the shop, and everything else is sorted out. In fact, I think he's out to come out and cancelled all the innovative new plans that the last CEO had because it's too complicated. I don't think that works in this environment, especially in an environment that's as, as volatile as it is right now. And the final thing about, grocery shopping and that I want you guys to understand is that it's because everybody uses the same product. Everyone sells basically the same product. The stuff that you're buying at a Pick and Pay, there's very few things you can get at Pick and Pay that you can't get at a ShopRite or a Spar. Okay, they're all pretty much the same, and the only differential is going to be how cheap is it and how efficient are they at basically getting it from the warehouse to their shops, and how cheap and efficient are they at exploiting the warehouse, also the floor space they have at their outlets. Okay, and it's basically logistics. And logistics are very, very country specific, or region specific. The logistical challenges of being in South Africa are very different from the logistical challenges from being in the US or Europe. That's one of the reasons, for instance, for South Africa, when ShopRite in South Africa tried to expand to Nigeria, they basically were not able to handle it because the logistical challenges in Nigeria are totally different from what they are in South Africa. They're much more difficult. And therefore, ShopRite was not able to basically, bridge that. And the same thing happened with regards to Walmart. Walmart operating in the US, tried to bring the same kind of model over to South Africa with Massmart, buying Game and Macro, etc. Didn't work out. Logistical challenges in South Africa are very different from what they are in the US. Behavior of consumers in terms of travel are different. And therefore, they weren't able to basically make that leap. And we've seen, of course, Massmart come down quite dramatically from the time they were purchased by Walmart. And I think that's something to be keeping in mind when looking at some of the expansions happening with Amazon to South Africa. People think, this Takealot, Amazon will do the same thing. I'm not quite certain because, like I said, logistically, South Africa is a very different animal than what the US is. Okay, now into a bit of a speculative, segment on AI / tech, we're going to focus on OpenAI. There's two things I want to discuss with you today. Firstly, is that rumors about the size of GPT-5 are coming out. Apparently, that there's talk that it's going to be about $2.5 billion to train, and they're going to be using something in the region of about 500,000, of the new chips that are coming out next year to do this. That is a huge expenditure by OpenAI. But I mean, if you consider the fact that the valuation of the company right now, they're looking at raising or selling shares at a valuation close to 90 billion. I think it's $86 billion. The idea that they'd be spending maybe 2%, 3%, 4% of the value of the company on their biggest, their flagship, product. It's not that much. I mean, I totally suspect in, say, the next 3 to 5 years, we'll be looking at, models being trained on, budgets of in excess of $10 billion. In fact, I would think that, you'd have multiples of $10 billion within 5 years in terms of the models. If there's no drop off in terms of, if there's no hard wall in terms of scaling, even if the scaling basically, you lose like, double the price and get only half as much better, I think they will still go into the tens, hundreds, tens plus billion or tens of billions of dollars for training these models. Because you can imagine if someone's half of, it was again smarter than somebody, an IQ of 100 versus an IQ of 150. Of course, it doesn't quite work like that, but that's like an idea to think of. 100 versus 150. How much more valuable is 150 IQ versus 100? It's not twice as valuable. It's much more valuable than twice as valuable. Okay, and I think that's something similar to is going to be happening with these systems. And the next thing I'll talk about is the ownership structure of OpenAI, because I heard a rumor or heard a thesis out there. I thought it's worth sharing with you guys. Now, for those that don't know, OpenAI started up as a non-profit. That means that it wasn't meant to make money. It was open because it's supposed to basically release all its findings to the world, be free and whatever. That's since changed. And Sam Altman has come out and said, no, we're not changing it totally. What we do is we're going to be partly, not for profit. We can make some profit if you invest in us, but there'll be a cap on that. The cap somewhere maybe 100, 200 billion. There's some discussion about that. Let's just say it's 100 billion, okay? Or say 200 billion, say 200 billion. What happens then? Like we're already talking about these companies being valued at 86 billion right now. Let's just say the total cap on profitability is 200 billion. At that point in time, what happens to the shares? Well, they become valueless because now, you've got your money back. You don't really have a claim on OpenAI. Where does OpenAI go to? Who runs it? It goes to a foundation. But a foundation doesn't really have a leader, does it? Yes, it does. Who will be the leader of OpenAI Foundation? It's probably Sam Altman. So if you look at it from this way, Sam Altman has basically found a way to finance the startup of his company and maintain total, and I mean total control of that company if it ever becomes really profitable. Imagine the Google guys raising money, and then once Google returns, say 200 billion, it becomes part of a foundation run by Sergey and Larry. At the current moment, because Google is there, Sergey and Larry will be the two basically decision makers on Google. They'd control it. Would they basically get dividends and so on? Probably not, but they'd control a multi-trillion-dollar company. And if OpenAI basically turns out to be what people think it might be, this could be a multi-trillion-dollar company. It could be tens of trillions of dollars. Who knows what the valuation could be finally? And who would control that? Basically Sam Altman. We may not be doing a salary from that, but trust me, there's a lot of ways to monetize control of a multi-trillion-dollar company. So that's a thesis that is out there about OpenAI and its structure. It's a bit more fringe, but it's an interesting idea to think about. Okay, thanks for joining me this week. Cheers, guys, and I hope you have a good weekend.